Welcome to the Tesla Daily News podcast for April 12th, 2026. Today, we're tracking a major autonomy milestone in Europe, fresh signals about Tesla's demand and margins, and a few competitive and Musk-related headlines that could sway sentiment around Tesla. Story 1. Tesla gets its first European green light for full self-driving supervised, starting in the Netherlands. Here's the hook. This is the first time regulators in Europe have approved Tesla's FSD supervised for use on public roads. Context matters because autonomy is the biggest swing factor in Tesla's valuation. Investors don't pay $1 trillion market cap for a car company with flat or declining deliveries. They pay for a software and robotics narrative where high-margin, recurring revenue scales. Details. The Dutch Roadworthiness Authority, the RDW, granted type approval after more than a year and a half of testing on a test track and on public roads. The system is explicitly classified as driver assistance, not full autonomy. The driver must stay in the car, stay alert, and remain responsible at all times. The approval now goes to the European Commission, which could allow broader EU recognition if a majority of member states support it. Impact. In the near term, this can support FSD take rates and subscription revenue in a key region where Tesla has faced demand headwinds. In the medium term, the bigger prize is regulatory precedent. If the Netherlands becomes the template, Tesla's path to additional EU markets gets clearer, which can shift analyst models for software revenue and autonomy timelines. Takeaway. The important investor read is not robotics SR here. It's that Tesla just reduced regulatory uncertainty in Europe for supervised autonomy, which is a necessary step before any larger autonomy-driven monetization story. Story 2. The Netherlands approval highlights Tesla's approach versus rivals, and that cuts both ways. Hook. Tesla is being framed as beating legacy automakers like Mercedes to an autonomy milestone in Europe. Context. In Europe, Mercedes and others have pushed for tightly scoped, rule-based autonomy approvals, while Tesla's camera-first, neural network approach has faced skepticism. Details. Some reporting points out Mercedes is aiming for broader European approvals around early 2027 for comparable systems. Tesla's FSD pricing benchmarks are also in focus. In the United States, FSD Supervised has been offered at around $99 per month. While in markets like Germany, it has been marketed as a one-time software package priced around 7,500 euros. Impact. If FSD rolls out smoothly and customers perceive it as a meaningful upgrade, it strengthens Tesla's software attach story and potentially supports margins even if vehicle pricing stays competitive. But if incidents occur or regulators tighten constraints, it can revive the safety overhang discount that has periodically hit Tesla. Takeaway. This is a catalyst for sentiment, but execution and safety outcomes will decide whether it becomes a durable valuation support or a temporary headline pop. Story 3. A cheaper Tesla is back in the rumor mill, and investors should think volume versus margin. Hook. Talk of a lower-cost Tesla launching first in China is resurfacing again. Context. Tesla's core problem in the last 2 years has been demand pressure and rising competition, especially in China, where local brands offer more models across more price points. Details from recent investor commentary. One analysis argues a cheaper model could expand Tesla's installed base, which matters because more cars on the road can drive higher margin software revenue like FSD subscriptions and generate more real-world driving data. Another perspective warns that the bottleneck may be demand rather than supply, and that a cheaper model risks compressing already pressured automotive gross margins. We also have one concrete data point cited. Tesla built more than 50,000 more vehicles than it delivered in the first quarter of 2026, described as the widest gap in at least 4 years. Impact. A lower-priced model could stabilize unit growth, especially if China is the first launch market. But investors should model the trade-off. If average selling prices fall faster than costs, margins and earnings estimates can come down even with higher deliveries. Takeaway. The bullish case is a bigger fleet that monetizes software and autonomy later. The bear case is near-term margin dilution and more evidence that the market is saturated at current price points. Story 4. Europe demand is still a battleground, and competition is getting sharper at the low end. Hook. Competitors are moving quickly in Europe with smaller, cheaper EVs while Tesla's lineup remains concentrated. Context. Tesla's global volume still heavily depends on 2 models, and in Europe the brand has faced both competitive pressure from Chinese automakers and reputational headwinds tied to Elon Musk's politics. Details. A European rollout and marketing push for Kia's compact EV strategy is being highlighted, with production for a compact model starting in Slovakia. The key investor relevance is simple. The fastest-growing part of the EV market is the affordable segment, and Tesla's absence in that segment keeps pressure on share in regions where price sensitivity is high. Impact. If low-priced competitors gain share, Tesla may need to respond with pricing, incentives, or faster product cadence, all of which can weigh on margins. On the flip side, Tesla's autonomy and charging ecosystem remain differentiators, but only if consumers value them enough to pay a premium. Takeaway: watch for Tesla's next pricing moves in Europe and any concrete product timeline for an entry-level vehicle. The longer it takes, the more entrenched competitors become. Story 5. Musk's OpenAI lawsuit twists again, adding noise around Tesla's CEO. Hook. OpenAI is accusing Elon Musk of shifting his legal strategy late in the case, calling it a legal ambush ahead of an April 27th trial date. Context: Tesla investors have to price CEO attention risk and reputational spillover. Even when a case isn't directly about Tesla, it can shape narratives, distract leadership, and create headline volatility. Details: filings describe Musk seeking leadership and governance changes at OpenAI, including calls to remove Sam Altman and Greg Brockman from leadership roles and alter equity arrangements. Musk's stance on damages also reportedly shifted from seeking a large payout range to requesting that any award be returned to OpenAI. Impact: this is not a fundamentals driver like deliveries or margins, but it can move the stock on sentiment, especially when Tesla is already valuation sensitive. Investors should be ready for short-term volatility around the court calendar. Takeaway: treat it as a headline risk factor, not a revenue line item. But it can still matter for multiple expansion or compression when the market is in a narrative-driven mode. Story 6. XAI turbulence feeds into the broader Musk execution bandwidth debate. Hook. Reports say 8 XAI co-founders have left since January, with internal restructuring and concerns about pace and safety. Context: Tesla's autonomy roadmap increasingly overlaps with AI compute, model training, and data pipelines. Markets have also watched Tesla's investments and relationships across Musk's companies, including capital and talent allocation. Details: departures reportedly followed reorganizations and heavy work intensity. Some accounts claim the safety org inside XAI has weakened. Musk has said XAI is being rebuilt from the ground up, comparing it to early Tesla rebuild phases. Impact: if investors interpret XAI instability as a sign of broader execution strain, it could add a small risk premium to Tesla, especially for the autonomy narrative that relies on AI excellence and consistent engineering delivery. Takeaway: the core question for Tesla shareholders is whether Tesla's own autonomy and AI teams remain focused, staffed, and shipping. XAI headlines can color sentiment, but Tesla's product progress and safety record will matter more. Quick recap for April 12th. Tesla just scored a first in Europe approval for FSD supervised in the Netherlands, which could become a regulatory wedge into the broader EU. At the same time, the cheaper Tesla debate is back, and it's really a trade-off between unit growth and margin preservation, especially with competition accelerating in Europe's affordable EV segment. Finally, Musk's legal and AI startup headlines add noise that can amplify volatility. What to watch tomorrow? Any confirmation of the pace of the FSD rollout in the Netherlands, early user feedback, and any hints from regulators about the EU authorization pathway. And on the business side, keep an eye on pricing moves or production signals that would validate or refute the idea that demand is the key bottleneck. Thanks for listening to the Tesla Daily News podcast. If you found this helpful, subscribe for daily updates and follow us wherever you get your podcasts for the next round of Tesla headlines and investor takeaways.